Hey, what's going on? It's Marshall back with Bids and Offers. I'm making this video today to show you how I took this trade using basic technical analysis combined with order flow tools like this footprint chart, cumulative delta, and the book map chart to help me visualize the buying and selling in the market in real time to confirm my ideas. I've been trading for almost 8 years now, and I fully understand the power of reading this information as it comes through in real time. The market is made up of orders and people who are willing to hit or lift them. My trading strategy consists of finding market context using basic technical analysis, and then looking in closely at the orders that are executed within the price action to understand who is getting trapped in the market and who is getting paid. Before I jump into the video, make sure you're following me on Instagram at Bids and Offers, where you get updates every single day of the trades that I take and a bunch of more valuable information that I guarantee will help your trading. All right, so let's just jump right into the video. This is a screen recording of Wednesday, January 14th price action on the S&P 500 during the morning. On the top left of my screen, I have a volume profile drawn over the early morning price action of Wednesday, January 14th. This chart in the bottom left is my footprint chart. It shows me all of the volumes executed on the bid and the ask, price by price, over a certain range bar. Specifically on this chart, I'm using 24 tick range bars, so that means that each one of these candles represents 6 points of price action. Remember, on ES, a point is worth 4 ticks, so 6 times 4 is 24. I adjust the ranges of these bars based on the volatility of the market. On the right side of my screen is Bookmap. This platform is absolutely incredible. It allows me to see all of the tape data against the order book, so I see the orders that do get executed against the orders that are trying to be executed. Remember, a market is comprised of passive participants and aggressive participants. Passive participants put an order on the market and wait for the market to come to them, and aggressive participants take the liquidity that is already being provided at the market by passive participants. Before I jump into the confirmation for this trade and exactly why I entered it around 69.48, I want to talk about the market context for Wednesday, January 14th's morning price action. Unfortunately, you're not able to see the full 5-minute chart on the screen recording, but early morning, basically what we had was a range between the 69.60s and the 69.80s up here. The market was moving back and forth in this range, and when 9:30 came around, when New York opened, the market actually tried to pop up and accept out of that range but failed. Very aggressive selling came through the market and brought this thing all the way down to the 69.38s. So pretty much a good 40-point move straight down from the pre-market range. I'm going to give you some context from the volume profile perspective. A volume profile is a tool that allows you to see all the volumes accumulated at price over a certain specified range. In this case, I have this profile drawn from about 5 a.m. all the way over the currently traded price at 69.48. What this profile tells me is that it is a P-shaped profile. Most of the volume is distributed at the top end of the profile, making the profile look like the big letter P. As the market sells off beneath this value area low and beneath this pre-market low, we have this high volume node start to form here, but the market does not accept inside of that area and instead continues to sell off. We come all the way down to these 69.38s where there's a bit of a higher time frame demand zone here. The market again starts to distribute some volume down here, and I notice on the footprint chart and on the order book, there are buyers starting to join the market above the 40s. You can see that over here on some of these positive deltas that show up inside of this profile. This profile I have set up with delta by price built in so that you can see all the imbalances between the bid and ask volumes by price. I noticed that the cumulative delta is starting to flip down here as we approach back up into the 40 range. Again, you can't see the full footprint chart, but basically on this drop down, there was extremely aggressive selling. The bids were getting smacked by aggressive sellers, and there was a genuine lack of passive buying effort in here trying to stop the market from moving down. As soon as that started to show up around these 40s, again, in that demand zone, I noticed that the positive delta starts to develop here on the footprint chart, and this cumulative delta is starting to flip. This cumulative delta was absolutely falling as the market was falling. More orders were hitting the bid than the ask. And then all of a sudden the buyers start showing up and start to lift the market back up about 10 points. Within that time, this delta starts to flip. Again, you can see these massive green bars right here. In a second, I'm going to get to my exact confirmation for this trade and why I decided to hit the buy button and get in this trade targeting the 69.63s for a reversal play. There's multiple confluences for this play. I'm going to get into those in a second. I'm going to play the screen recording so that you can see me hit the market long right here. Okay, so I'm in 69.48 and my stop is at the 44s. Something that I want to note here is that as you see the market fall down into these 45s, some buying starting to show up here. There's green bubbles starting to form. There's bids popping up from passive buyers just underneath this low here as the market is starting to rally back up. Again, this is a 5-minute chart. You can't see the price action very zoomed in, but the market is lifting up and there are genuine buyers on the tape. And the sell-offs or the pushes down by sellers are not getting paid. As you can see, all these red bubbles in here represent orders from sellers hitting into bids. All these orders technically want to see the market move down in order for their P&Ls to go green. But the market was not moving down. Instead, it was actually moving up, and these aggressive buyers were starting to show up, furthering the potential of this rally. Right here, I want you to look very closely at the 69.47.5 level. Notice there's a very prominent green bar right here. This represents about a positive 500 delta, meaning that 500 more volume lifted the offer instead of hitting the bid at this price. This is a standout order flow level for me down here in this area, and as the market is actually lifting up, this gets executed, and I want you to watch what happens when the market tries to sell off beneath this level. Note how the market keeps flicking back up as it tries to sell off beneath these 47s here. The buyers show up on the tape, and the sellers try to give it one effort down, just like that right there, but the buyers are actually able to lift that right back up. Watch this volume tail start to form on the footprint here. Look at that lack of acceptance underneath that level. Now the tape is starting to speed up quite a bit. I'm not sure if you saw that over here, but the order book started to flicker a lot and this volatility started to increase. I did jump in this trade kind of early because I felt that this reversal was going to start to happen immediately after seeing this positive delta come through and those first couple retests of that delta holding. Right here is also a great area where you could try the market long, seeing the market hold this positive delta. This is a basic confirmation that I use in almost every single trade that I take. I'll show you what the market looks like once the buyers really start to show up and this tape starts to rip. Again, there's more buying that comes in right there. Look at that flick up to the 49s and the 50s. More buying showing up on the tape. We have a pretty sizable bid sitting down here at the low, and my stop is protected down here at these 69.44s. I put my stop right under these previous failed lows by sellers, saying that I want to get out of the market for a 4-point loss if the sellers actually are able to achieve lower prices. I have a 4-point risk on this trade and a 15-point profit going from the 48s to the 63s. 15 divided by 4 is 3.75. This trade is a planned 3.75R risk multiple, meaning that if I win this trade, the win will be 3.75 times my initial risk on this trade. Here you can see the volume really start to come in. We see some bids popping up and the buying spree really starts to pop. This thing immediately rallies 10 points. There was some volatility in the market and the buyers got very aggressive here. This thing pulls back and I go break even stop. You can see I move my stop up to the 48s. So now my worst case scenario on this trade is that I lose nothing. Up here, notice there's a big offer at the 67s. My thesis on this trade is a reversal back into the value area low of this session. There was a lot of volume done up in this area, and the fact that the market is holding this larger time frame demand zone down here at these 40s tells me that there's a chance the market can rally back up into these previously traded prices. The order flow tells me that in the moment there are buyers showing up down here defending this area, and I see a trade opportunity with minimal risk for a decent reward, so I put it on right here at the 48s. This thing continues to just rally up into these 63s. I'm targeting the value area low right here, just looking to get all out on a quick move back up into this level. This level also lines up with the pre-market low right here at the 63.5s. So that's another confluence. Pre-market lows and pre-market highs are always very important when the market trades outside of that area and goes back to retest during the regular cash hours. The market pops all the way up to these 63s. That's where I get out of the market right there, selling for a 15-point profit on 4 points of risk. Almost a 4R trade realized. Very solid. Something that I really want to note here is that this is a repeatable setup. Everything that had to do with this trade, from the market context on the candlestick chart, to my volume profile perspective, to my order flow analysis and direct confirmation to get in the trade, everything comes together to be a system. My trade system consists of combining confluences and using the order flow to confirm every idea that I have in real time. If your trading strategy does not have repeatability built into it, where you could take that same exact trade over and over and over again, it's not going to make it. It's not going to work. You need to prioritize repeatability in your trading. Going for home runs is not going to make it long term. Going for 0.5R or 1R scalps is really hard to stay profitable in the long term because you have to be right very often. My strategy actually gives me the wiggle room to be wrong more than I'm right and still make money. So if I'm right more than 50% of the time, that's just an added bonus and I'm making even more. Prioritize repeatability, prioritize your R multiples, and prioritize tracking the trades that you take so that you can understand what kind of a trader you are, what you best execute on, and what works for you. Every single trader is different. There is no right or wrong in trading. only a system that you develop for yourself, that you have proven to yourself that it works for you. I make these YouTube videos to try and help people understand the way that I trade. By no means do you have to trade this way. If you find something that is comfortable and works for you, by all means do it. Make sure you're following me on Instagram. Don't hesitate to reach out. Thank you for watching this video fully. I really appreciate the support. Leave a comment down below if you have some feedback. And if you have friends that trade, share this video with them so they can learn as well. I'm Marshall. Thank you for watching Bids and Offers. Peace out.